Joining me now is Portfolio Wealth Advisors President and Chief Investment Officer, Lee Munson. Lee, great to see you. Thank you so much for being here. Your reaction to this market here with a firmer tone, holiday shortened week, what are you expecting?
You know, what I'm expecting is I have this new ratio, and my ratio is the number of CEOs pulling forward guidance for the rest of this year divided by the amount of CEOs that don't pull forward guidance this year. And I think that's going to be a large ratio. What we don't understand going into this, listen, we love the news. I like to hear on Friday that my iPhone that I just bought, the laptops that I think people have been rushing to buy ahead of tariffs, that those are going to be exempt. I'm not exactly looking forward to seeing what the semiconductor and pharmaceutical tariffs are going to be. But the bottom line is investors like this like, you know, it's de-escalation, but also we're going to have the next 30 days where CEOs are not going to have a lot to say about the future. What I don't know, and I think the big million-dollar question is, are investors in general aware that we're not going to get clarity from CEOs this earnings season? And will that be shocking? I still have more stock to buy. If we get a retest of the lows this year, I'm going to be in very aggressive, and I'm really going to be all in if we see last Monday's prices.
Yeah, I mean, the problem is we're about 3 weeks away before earnings for the auto sector, and exactly 3 weeks away before the 25% tariff goes into effect. So these companies don't have the clarity that they need. There's also tariffs that they're not sure if they're stacking or not. The president is saying that he's going to come out with a new tariff bucket and explain that with regard to semiconductors. Or are these companies facing 25% on steel and aluminum, 20% on fentanyl, 10% reciprocal except in China, 124% parts from China. So it's unclear if these are stacking, and I think that's what's holding companies back from releasing guidance for the year. What do you think?
Well, I do think that, I mean, that's the least of the problems, and then we're hearing that inflation is going to be higher than we think this summer. I'm very concerned about that inflationary element. We've got earlier this year, places like JP Morgan, Deutsche Bank put out a lot of research about what we thought 10 to 20% tariffs were going to do. And the consensus was maybe a quarter to 75 basis points. Now we're hearing maybe we can have 5% inflation this summer. That's way above even what I was estimating in my worst case scenario. And you can see it in the price of 30-year Treasury. There are these rumors that America's over and foreign countries are dropping treasuries like flies. You know, I don't really see it that way. I'm very long the 30-year Treasury from January. I think it's just a general recognition that inflation is going to be higher than a lot of us expected. And we don't know how the Fed's going to address that. So we don't have any clarity in earnings. We have some real unknowns and higher levels of inflation that we thought just a few months ago. And again, the news is changing every 2 or 3 hours. I think it makes it difficult. I don't think we're done with this, but I think there's a lot of good deals in the market we haven't seen yet. I think over the next month or two, we're going to see the prices again.
Well, what about the yields? I mean, the 10-year yield up 1.25 basis point this morning, sitting below 4.4%. Federal Reserve Governor Christopher Waller said that higher inflation from Trump's tariffs should be, quote, transitory, and the Fed may need to cut rates sooner if the largest tariffs remain in place. Smaller tariffs, he said, mean a cut later in the year. Lee, your reaction, and what are you expecting out of the Fed?
I mean, if it just nobody should use that word again, Maria. I mean, transitory is just not what investors want to hear. I mean, it's like, why do I want to hear this again? And also, when he's talking these high numbers, I think that that's what's killing treasuries more than anything else. So I think if you're long that duration, like I am, I'm staying long. I would still buy the 30 if we saw 5.1, 5.2, 5.3. I think that's a good deal longer term, because if we actually see that type of high inflation, I just don't see a world in which the Fed is not going to take action, or at least not jawbone or threaten that they might lower rates. But I think the comments were very interesting yesterday, because the idea is maybe it's worth cutting rates. I hope we do this summer. I think everybody will be much more comfortable if we see short rates come down.
All right, we'll be watching that. We've got great commentary on the Federal Reserve when I speak with Ira Stoll coming up, so stay with us on that. Lee, great to see you this morning. Thank you, sir. Lee Munson.
Thank you.